Well, for more analysis on various market moving results, Chad Slater from Morphic Asset Management joins me now live. Chad, thanks very much for joining us. I know you invest overseas and that sort of thing, but you have been looking at Woolies and Coca-Cola. Now, it seems like market reaction was kind of markedly different, at least at the outset. CCL was down at the time of well, it's still down. WOW was up, but it's now down slightly. What do you think about both these stocks?
Look, Helen, as you know, we're a global investor, so we look at Australian stocks on a case-by-case basis. And we do tend to short a few stocks in Australia. So what's interesting about these is we've been short both these stocks at various points in the last 2 years. You and I have spoken a bit about Woolies. And we had been short Coca-Cola. We're not currently short either of them. But if we step back, what I think is fascinating here is we were short both these stocks. They're both in decline. And one of them is successfully turning their business around, and as evidenced by the Woolworths price being, even if it's down the day, it's still at close to 27 versus lows of $21. And Coke's making new 52-week lows. And I think that says a little bit about they're both consumer staples, but the thing I think it says the most is about management. I think Woolworths came and made some tough decisions, and they did what they needed to do. And they got in there and they've actually turned staff morale around, and that's very important, having people on checkout counters that care, that the stocks shelves are full. These are things that shoppers care about. Coke, on the other hand, it just feels like they're a little bit lost still. I don't know where and how they're completely going to fix their business, and buying back shares is a sort of a band-aid solution in our mind. Yeah,
now, I mean, you know, you're comparing the management. It is a bit hard to do that. Sure, they're in consumer staples, but slightly different parts. And you could still argue, couldn't you, that Woolworths should do well. I mean, yes, they had a competitor that was very aggressive for a time, and that was Coles. But they're essentially a big duopoly. I mean, you know, yes, there are other smaller players, but they should do well. You know, everybody has to eat and buy food, and they're one of the big players.
And look, you touched on a point there, Helen, that Woolworths in this turnaround, whilst we should give some credit to Brad and his team, has been assisted by Coles. Coles has a single-minded focus on return on funds employed. And now that's quite good in the medium term, but the problem is I think it personally gives them the wrong incentives. And so what I mean by that is one of the reasons why like-for-likes are up so strongly is that Coles is largely sitting there and letting Woolworths take back market share. So it is a conducive environment.
Why do you reckon they're doing that? Because, it wasn't that long ago that Coles was a super aggressive competitor and stole that market share from Woolies.
Look, without being privy to the discussion at board level at Wesfarmers, one would have to guess the decision's been made that losing some share this way and keeping their prices close-ish in line and giving up there is ultimately more profitable for them than trying to fight Woolworths on the way down, where both of them lose. Personally, we think this is the wrong medium-term choice, but in the near term, it does enable Woolworths to turn around and actually stops Coles from going backwards as quickly as they otherwise may if they're competing on price against them aggressively.
What role would you give? Certainly Brad Banducci seems to be the right person in that role. What role would you say the chair, Gordon Cairns, has played in this turnaround?
Oh, look, to be honest, my personal opinion is that Brad has led this. Like all the people we speak to liaise with suppliers. One of the biggest criticisms of Woolworths over the years has been they treated their suppliers quite poorly. For example, Aldi has a great reputation with suppliers. There's a lot of talk about a contrite Woolworths, and I think that comes from line management. I think that comes from Brad having worked in the team and that. And I'll be honest, Helen, I underestimated his ability here, that he has done a fantastic job in reinvigorating his management team and making them believe that they can be a great business again. Yeah.
Now, on the other hand, CCL, I mean, Alison Watkins has been a fantastic, runner of businesses. She was at Berry a long time ago. She was at GrainCorp. I mean, are you saying that she and her management team are sort of struggling to find their way in a world with those particular products?
Yeah, Helen, you mentioned before that they're not comparable. I would point out that Coke is largely an oligopoly to / monopoly business.
Yep, true.
They may not be in the exact same thing, and people may not necessarily have to drink Coca-Cola, but they do sell a range of beverages. That's not like they're at BlueScope yesterday, for example. They are quite different businesses like that. But well, look, she has a different challenge on her hands. She has a carbonated soft drink, beverage drinking market that is shrinking. They tried to go hard on pricing. They've tried to diversify. They've been unable to find any cut through. But one of the things is the onus is on management. That's why people sometimes complain about management being paid so much, but one of the reasons why they are paid so much is to find a way to solve these problems. And if you look at someone like McDonald's, they're not an Australian example, but as a global investor, they're an interesting case study. McDonald's food is not particularly popular amongst AB demographics, a bit like Coca-Cola. Most people in AB demographics don't drink Coke anymore. But McDonald's has found a way to reinvigorate their business, adjust their menus and grow their business. I don't know what the solution is for Coca-Cola, but what I do know is they don't currently have a solution.
Yeah, all right. Chad Slater, Chief Investment Officer at Morphic Asset Management. Thanks so much for joining us, Chad.
Cheers, thanks, Helen.